I mean, if you look at past cycles, it's anything but a V shape. And the reason is bear markets tend to be in a position where you get people so scared that they're scared to rush back in, right? So it takes a while. So if we go back to like the 2017 highs here, and then the bear market, you can see we even had this long period and then kind of this, and then you can see for a long time it almost went sideways before starting back up again. So you got to think that yeah, 100%. And I think that's so important, because as you develop, let's say you do 10 trades a week or 50 trades a week, you get to look back and see, okay, which ones were the ones that I was always losing on, versus when you're just in the midst of it and you're not really tracking it, you're just like, oh, I don't really remember which ones I lost on a week ago or 5 weeks ago. And so that's so helpful to review and see what's working. And by the way, I think everyone needs to understand is that there are different techniques that work for different people, because everyone's personality is different, everyone's discipline is slightly different. And so you may find that certain things work for you better that don't work for other people, but that way of keeping that trading journal is one way to track it and figure it out. So that's super, super important. So my years, my period, I'm old enough where in the early years of my trading, when I did a trading journal and was figuring it out, we didn't really have all these fancy schmancy apps or anything like that to trade. So I just did it the old fashioned way in like a journal book with, lined paper. But today, honestly, that's so cool. Like, if you could enter this stuff and be able to review it and by the way, one of the things I think is before you go to sleep, review it, right? Because I think you go to sleep after reviewing it and it kind of sits in your subconscious and you kind of get into that. But yeah, I wish they had that kind of stuff and like show me cool like graphs and stuff, but I didn't have that. And that's really how it all started. And it was all about just self-reflection, discipline, and studying charts to where I got to that point where I slowly became a profitable trader. But like legit, it took me like 5 years before I became consistently profitable. And I lost, going back on it, if I could add up all the money I lost over that period, easily hundreds of thousands of dollars trying to get there. But at the same time, I look at it like this. Trading is the best career in the world. You can do it from your underwear in your house. You can do it from bed if you want on your laptop. And there are plenty of people that go to school and spend $500,000 to become a brain surgeon. And now I make more money than a brain surgeon, and I can do it from any place in the world. I can do it from home. It's an awesome thing, but it took a lot of energy and time. And so one of the things I love to do is I love to say to people, like, get educated, because that's going to cut that loss down. Like, everyone's going to pay the market, and you're going to pay the market a ton more money than someone that actually knows what they're doing and following someone. So I would definitely say do it the cheaper route, which is to find someone legitimate and find out and learn from them. And that's such an important point to see. You see this stuff on social media. It's all BS, folks. Like, I don't even have a Ferrari now. Like, I'm at the point where I could buy it, but I'm smart enough at this point to say, no, that's bad money management. I'm going to pay off my house. I just bought a new house or whatever. I'm going to pay it off. I'm going to do smart things with my money, and I'm going to use my money to trade more, because then I can make more. And yeah, maybe in a few years, I'll be like, all right, I'll buy myself a fancy Ferrari, but I'm going to make sure I got 10, 20, 30 million in the bank before I do that, so that I know that if something bad happens, I am taken care of. Like money management for trading develops, and it goes to every aspect of your life, where you make smart decisions in every aspect. And I think that's so important, is that, once you gain that discipline, it helps everything. It helps in all decision making, and it actually makes you just such a better overall manager of your financial portfolio in everything, not just stocks or not just crypto. A real trader has gone through the weeds and gotten smoked so many times and smacked down so many times, and I've done that. It sounds like you're the same way, that like my wife will order a bunch of stuff on Amazon and I'll still give her a little bit of a hard time. Like, do you really need that? It might have been like $30, but I'm like, you have this mentality where the market can take away your gains so quickly and you've been burned that, like, even when you've got millions in the bank, you're still like, yo, this could go away from me, because I've experienced that so many times before that you just in general are more careful, and it's actually a good thing. The key is you got to get up, but learn from what just happened. Because if you just make the same mistakes over and over again, you're never going to get anywhere. So you got to make sure you learn. That we talked about the trading journal. That's a way to do it. Learning the charts. The charts, again, are just so important to kind of give you that clarity. And basically what charts do is they're never going to be 100%. And I think this is a big fallacy. I've seen so many people like, oh, that one time Gareth said that, it didn't work out. So, technical suck. It's like, dude, it's like it's 80%, right? What that means is that 8 out of every 10 times you win, but you're still going to lose 2 times out of every 10. You're never going to get to 100%. Just like you saw that, you see these crazy flashy photos on Facebook or on Instagram. It's BS. Like, a real trader knows that not everything is always going to work out, and you have to be prepared for that. And I go into every trade always thinking it could be that one loser, which keeps me more conservative, right? And that actually saves me from those big losses. So the first thing I'm seeing right here is yes, it is. I mean, it is holding support. I think this would be probably the proper trend line to kind of keep an eye on. So you're right. As long as it holds this trend line, that's fine. If this breaks, then that's where trouble starts. But certainly you had a big wide range candle here. This is kind of not the greatest inside bar because it retraced the entire thing. Those are always a little bit troublesome. But the bottom line is it looks okay to me. I'm not sure if it's the most amazing chart in the world, but I think that as long as it holds this trend line, it's fine to stay long. I think it's fine. But again, just watch in case that breaks. I mean, if you look at past cycles, it's anything but a V shape. And the reason is bear markets tend to be in a position where you get people so scared that they're scared to rush back in, right? So it takes a while. So if we go back to like the 2017 highs here, and then the bear market, you can see we even had this long period and then kind of this, and then you can see for a long time it almost went sideways before starting back up again. So you got to think that that's going to be the same sort of thing. In terms of when it will start that next bull run, the common theme would be like the bear markets usually bottom out 12 to 18 months after the top. So if the top was November, this November to the following like March, April, May. But my fear again is that you have to be aware that with the Fed not printing, it makes me worried that this bear market could be a little bit longer. But I think at the very least, you say 12 to 18 months before the bottom is in. At least we're getting close to November, so that's good. But that's why I still think there's more downside at minimum to get us to November or through November. Yeah. I mean, I'm in the camp where this is the first bear market where the Fed's not printing money. So in the very least, we should do 80 to 85%. And then that's the one fear, is that it could be a little bit worse because the Fed's not printing. Now, if the Fed starts printing again, that wouldn't change potentially my view on it. So I think that's something I'm paying attention to. I also think regulation in the crypto space is unbelievably important to have before we get that bottom. So what I'm even thinking is we might get regulatory kind of notes out about what they're going to do with the altcoins, and that could cause a flush, but that could be the bottoming flush where you buy into it. Because I think there's a lot of big money that's saying, hey, listen, we can't put $1 billion in crypto even though we want to, because we don't know the framework. What's the framework? How is the SEC going to regulate? But once they know that, they may feel more comfortable. So I think, again, you got to look at 80, 85% at minimum, maybe a little bit more, but watch for the Fed starting to print again, and then also watch for regulation to finally be figured out and the market to know. I think, like, for me, I've been through enough bear markets in my stock career, commodity career, and now crypto, where bear markets usually, just like markets tend to go higher than any of us think, they also tend to go further to the downside because greed and fear are just so pervasive and powerful emotions. So for me, I look at crypto, and yeah, it's been a nasty decline, but it's not that kind of flush out where you're seeing, the Twitter sphere calling for like zero Bitcoin. And I think that's something that I want to see, to the point where you're seeing a lot of the retail crowd just kind of throw in the towel. And then I'll start to actually get bullish, more bullish on it. But by the way, and just one other thing, it doesn't mean that I'm going to wait to 12 to 13,000 to buy a little Bitcoin. So as it comes into the teens, I actually picked up a little at that 19,000 handle. But it's just kind of, I'm going to dollar cost average from there on down. And so I might be still buying if it gets to 5,000, but the idea is that you don't know where the exact low is and you don't want to miss the bear market. And I agree with you that we're closer to the lows, the bottom, than not at this point. So, I still think we're going to go down 12, 13, maybe even lower. But I think because none of us know, I don't want to miss the next bull market. I'm a long-term bull on Bitcoin. So you just kind of dip your toe in the water, as it kind of comes lower at that point. So I don't use cold storage because I worry my kids will find it and drop it in the toilet, or like the little disc or whatever. But I will say this is that absolutely I have multiple. I think I have 4 crypto accounts with different brokers. And I do that on purpose to diversify out in case someone hacks my account and takes it. At least I'm only losing 25% of my money at that point, because you don't have FDIC insurance, which you do have in the stock market. So there's really, it's the Wild West. And I've had situations where my SIM card's been jacked and they've gotten into it. It's crazy out there. So you gotta protect yourself. If you have $1,000, maybe it's not worth having multiple accounts. But once you get north of a certain amount, you definitely need to diversify with multiple brokers to diversify your holdings and really just protect yourself. Is this a wedge pattern of epic proportion or what? So basically, for those of you out there that don't understand wedges basically are price actions getting tighter and tighter, and it's usually like a spring, right? So it's winding that spring tighter and tighter, and eventually you see how this gets to a head. What this is telling you is that XRP probably in the next month to 2 months, by October, is going to have to break out or it's going to collapse down. And my guess is because it's winding so tightly, it's going to be a big move. Now, the amazing thing, we talked about this earlier, how charts can predict the news. Wouldn't shock me here if right around September, October, we hear from that judge about this aspect of what's going on with XRP. And then that's going to create either that breakout or that breakdown. So it's coming. I would say within 2 months, we have something big on XRP that's either going to shoot it up or it's going to collapse it. So my guess is, I think the market and the dollar, if you look at the dollar, it's really trading at its recent highs. So my guess is it'll be slightly more dovish than the market fears. It's still going to be hawkish. I still think 25 to 50 basis points in September, they're going to hike. But I think the market's worried that it's going to be more aggressive than that. So I'm kind of leaning towards just slightly dovish. That could give us that one push up in crypto or in Bitcoin before we see that next leg down that could start in September. So Twitter, great place to find me. I do a couple tweets every day, or at least I try to, on interesting things, market psychology, all that stuff. But I would just leave you guys with this, is that, just remember that trading takes effort. It takes a lot of discipline. It takes a lot of learning. Everyone can achieve it. I don't believe that there's anyone that can't become a trader, but it does take that effort. From my history, you can see what I've put in. So I would definitely say get educated, learn how to read charts. It's so empowering to have that freedom to think that you can go to any market, crypto, stocks, commodities, find a good chart setup, and it's going to play out with a percentage probability like we've talked about.